Welcome back, everyone. I'm Jamie, and this channel is powered by Technests. If you're trading prop firm evaluations or managing funded accounts, you already know the pressure is real. You're not just trading the market, you're trading inside strict rules, tight drawdowns, and firm limits that punish small mistakes fast. That's exactly why Technests exists. Technests builds structured tools for U.S. futures prop traders trading ES, NQ, and GC on NinjaTrader. The goal is simple: help you trade with discipline. When emotions want control, Dr. Markets is the planning tool. It helps you set the rules before you trade. Your risk limits, your trade limits, your time windows, your event windows, your structure. TradeRx is the execution tool. It helps you follow that plan the same way every time, without impulse entries, without overtrading, and without breaking your own constraints. This is not about guarantees. Trading is risky. Prop rules are strict, but structure can reduce the mistakes that blow accounts. Now let's get into the title for today: why many prop traders struggle, and how structured systems can help a harder truth behind the prop firms and their marketing styles. Prop trading is often marketed as a fast track. Trade firm capital, collect payouts, work from anywhere. But the reality is much tougher. Across the industry, only a minority of traders complete evaluations. An even smaller group reaches repeated payouts on funded accounts. Most traders never reach a point where prop trading feels stable. Most traders never reach a point where it feels sustainable. This is not usually because traders are unintelligent. This is not usually because traders are unlucky. It's because most people bring emotional decision-making into prop trading. And prop trading is defined by strict rules. And prop trading is defined by hard limits. Markets punish improvisation. Prop firms enforce compliance. Humans under pressure often do the opposite of their rules. Structured systems do not remove risk. Structured systems do not guarantee success. But they approach the problem differently. They enforce constraints first. They leave less room for emotional decisions. Why many prop traders fail. Most prop failures are behavioral. Most prop failures are structural. They are not mainly technical analysis problems. The same patterns repeat again and again. One common failure is breaking daily loss limits. A trader takes early losses. The trader feels the need to get it back. The trader keeps trading past their own plan. Or the trader keeps trading past the firm's daily cap. Even if the strategy has an edge, one emotional day can ruin an evaluation. One emotional day can also damage a funded account. Another failure is ignoring event restrictions. Many firms restrict trading around major events. CPI is one example. FOMC is another example. Major jobs data is another example. Yet traders often do the opposite of what the prop environment requires. They see volatility as opportunity. They trade through restricted windows. They trigger violations. They trigger closures. They trigger resets. Another failure is overtrading and oversizing. Fear of missing out pushes traders to trade more. Frustration after a loss pushes traders to trade more. They add contracts beyond plan. They chase price with impulse entries. They take far more trades than the plan called for. In prop trading, this can end accounts quickly. Even good strategies can be destroyed by this behavior. Another failure is poor balance and drawdown awareness. Trailing drawdown rules are easy to misjudge in real time. End-of-day thresholds are easy to misjudge in real time. Max loss mechanics are easy to misjudge in real time. A trader enters too close to a trailing level. A trade moves slightly against them. A violation is triggered mid-trade. The account is lost because of structure, not because of direction. Another failure is treating funded accounts like evaluations. In evaluations, traders push hard to hit the target fast. In funded accounts, the priorities change. It becomes less about speed. It becomes more about longevity. Aggressive evaluation habits can blow funded accounts quickly. In short, most failures come from rule and risk violations. They do not come from a lack of clever setups. What structured systems do differently? No system can guarantee profits. No system can guarantee payouts. No system can guarantee pass rates. Markets remain uncertain. All trading carries risk. But structured systems can reduce discretionary damage. They do it by enforcing constraints before trades go live. Technests uses two tools for this approach. Dr. Markets is for planning. TradeRx is for execution. Constraints before action. A rule-based system checks conditions before an order can execute. It checks account balance relative to drawdown limits. It checks daily loss thresholds. It checks restricted news events. It checks limits on trades per day. It checks limits on trades per session. If constraints are not satisfied, no trade is placed. The system does not bend rules. The system does not feel pressure. The system does not feel FOMO. Structured trade planning. A planner defines trade parameters in advance. Stop loss is defined. Take profit is defined. Maximum contracts per trade is defined. Timing windows are defined. Event avoidance rules are defined. This does not ensure success, but it converts intentions into clear rules. It converts, "I'll be disciplined today," into something enforceable. Automated, rule-based execution. Execution happens inside the plan, not inside impulses. The system enters according to the plan. It respects caps. It respects cutoffs. It can halt further trades once a threshold is reached. The key difference is simple. Execution is no longer decided in the heat of the moment. Real-time attempt trading. Log systems can record attempted trades, not just executed trades. If a trader tries to trade after a daily loss limit is exceeded, it can be blocked. That attempt can be recorded in the trading log. If a trader tries to trade during a prohibited event window, it can be rejected. The reason can be recorded in the trading log. Over time, the trading log shows where discipline breaks. It shows patterns the trader may avoid confronting. Payout-aware operation. Without promising payouts, a system can be configured with payout cycles in mind. It can reduce risk as a funded account approaches a payout threshold. It can block new trades after a chosen performance level is reached. It can emphasize protection during funded phases. This does not mean payouts are guaranteed. It does not mean payouts are regular. It means behavior is aligned with a realistic goal. Stay within rules long enough to have a chance at withdrawing. Hypothetical case studies. Illustrative only. These examples are hypothetical. They are not typical. They are not guaranteed. They are not performance claims. They show how behavior can change when structure is enforced. Case Study 1. ES Trader and Daily Loss Limits. A trader focuses on ES. They repeatedly fail evaluations. They trade past their daily limit after early losses. With structure using TradeRx, daily loss is set below the firm's maximum. Once that limit is reached, new trades are blocked. Attempts to keep trading are recorded in the trading log. The trader can review them later. The trader can still have losing days. The trader may still fail evaluations, but revenge trading is constrained. That improves the chance of completing a full evaluation run. Case Study 2. NinjaTrader and Economic Releases. A trader focuses on NQ. They like trading CPI spikes. Their firm discourages or prohibits it. They lose accounts due to violations around news. With Dr. Markets and TradeRx, CPI times are marked as restricted windows. New orders are blocked during those times. Attempts are recorded in the trading log. They may feel like they are missing moves, but their accounts are less exposed to rule-based disqualifications. Case Study 3. GC Trader and Position Sizing. A trader focuses on GC. They increase size after small wins. They try to accelerate progress. One over-leveraged loss removes weeks of steady work. Under a rule-based approach, maximum contracts are set. TradeRx refuses entries above limits. Oversize attempts are recorded in the trading log. They are not executed. Drawdowns can still happen. Returns remain uncertain. But catastrophic oversizing becomes harder to commit. Humans versus systems, different failure modes. Human-driven trading under stress follows predictable patterns. Traders chase losses with bigger trades. Traders override plans when markets move fast. Traders treat rules as guidelines. Traders focus on being right instead of respecting limits. System-driven execution behaves differently. It checks constraints before placing orders. It treats each trade as part of a plan. It stays consistent when markets are emotional. It focuses on rule adherence, even if it skips trades. Neither approach avoids losses. Systems can be misconfigured. Strategies can be poor. Markets can behave unpredictably. But rule-breaking through mistakes are reduced when boundaries are enforced. ES, NQ, and GC, different contracts, same lesson. ES tests. Patience. Overtrading often happens when traders get impatient. NQ tests nerve and risk control. Volatility makes oversizing and chasing dangerous. GC tests conviction and plan discipline. Chop and extended moves push traders to break structure. In all three, the issue is not prediction. The issue is behavior under limits. That is where systems can make a measurable difference. FAQs, failure, systems, and realistic expectations. Some traders ask if intuition is needed. Intuition can help with strategy design. It can help with market context. But live execution often conflicts with rules. Execution is usually safer when it is rule-driven. Some traders ask if systems miss good trades. Yes, systems can block trades that would have worked. That is not a flaw. That is the cost of protecting accounts long-term. One missed trade is often less harmful than one rule-breaking loss. Some traders ask if automation is risky. Yes, it can introduce technical risks. Failures can happen. Misconfigurations can happen. Connectivity issues can happen. Automation must be monitored. But it can reduce emotional rule-breaking. Some beginners ask if systems help. Systems do not remove the learning curve. Systems do not guarantee success, but they can prevent destructive habits early. Some traders ask if prop firms allow automation. Many firms allow some forms. Policies vary. Always read the terms. Ask questions when unsure. Stay compliant. Key takeaways. Many prop traders fail due to behavioral and structural issues, not just bad strategies. Common failure points include daily loss breaches. They include trading restricted events. They include oversizing. They include treating funded accounts like evaluations. Systems like Dr. Markets and TradeRx cannot guarantee outcomes, but they can enforce constraints. They can help maintain structure. They can record attempted violations in the trading log. Across ES, NQ, and GC, traders last longer when they treat prop trading as rules first, not as improvisation. The future of prop trading likely favors system operators, not discretionary gamblers. From chaos to deliberate structure, prop trading is not an easy route to financial freedom. It is demanding. It is rule-heavy. Most traders do not reach consistent payouts early. The difference is not smart versus dumb. The difference is not lucky versus unlucky. The difference is unstructured emotional execution versus structured rule-enforced operation. Technests is built around the second path. Dr. Markets helps you plan with structure. TradeRx helps you execute with discipline. That does not remove risk. That does not guarantee success. But it moves you away from chaos and toward deliberate structure. If you are ready to treat prop trading as a structured, high-risk profession, not a shortcut, explore how Technests can support your process at Technests AI. Thanks for watching, and I hope this gave you a clearer way to think about prop trading as a rules-first business, not a guessing game. If you found this helpful, hit the like button, subscribe to the channel, and turn on notifications so you don't miss the next video. In the next one, we're going to break down the most common prop rule traps across Apex, Topstep, and Earn2Trade, and how to set a simple structure that keeps you out of trouble before you even place the trade. If you want to explore how Technests tools support structured planning and disciplined execution on NinjaTrader for ES, NQ, and GC, visit Technests AI. Thanks again, and I'll see you in the next one.